Good day, everyone. Today, our team will present to you an investment thesis that hinges on the impact of a potential large-scale geomagnetic storm akin to the historic Carrington event of 1859. For our team's long recommendation, it is the BikeExchange company. Given the anticipated disruptions to traditional power sources, there will be a substantial shift in consumers' behaviors towards alternative modes of transportation. And for our team's short recommendations, it is the Origin Energy. The traditional energy providers like Origin Energy may face challenges during and after the storm. The disruption of power grids and infrastructure could impact their operational and revenue streams. A solar flare is a sudden explosion on the sun's surface, releasing tremendous energy and causing electromagnetic disturbances on Earth. Based on our analysis forecast an EMP storm surpassing the magnitude of the Carrington event in 2025, Origin Energy, founded in 2000 and headquartered in Sydney, stands a leading force in energy sectors. Its primary income streams stem from electricity generations, natural gas production and exploration, and retail energy services. Meanwhile, BikeExchange, established in 2007 and based in Melbourne, operates as a global marketplace for cycling products across multiple continents. For a company like BikeExchange, the storm can lead to an immediate surge in demand for bicycles as a primary mode for transportations, especially in urban areas. This shift may face temporary supply chain disruptions, but over the long term, recurrent power grid issues may drive a lasting preference for reliable, low-tech solutions like bicycles. For a company like Origin Energy, the storm can disrupt electrical power grids, resulting in widespread power outages. These disruptions can lead to an increased cost related to maintenance, repairs, and recovery efforts, which will impact the financial performance of the company. The broader macroeconomic implications of the EMP storm include short-term disruptions in electrical supply, impacting overall economic output and reducing productivity across various sectors. These disturbances can cause a loss of consumers' confidence, leading to changes in spending habits beyond bicycles and electrical services. Next, I will pass to Ronan to talk about BikeExchange company in details.
Thank you, Desmond, for that insightful top-down analysis. We can extrapolate future performance during the EMP shock using the historical share price of BikeExchange. On the left depicts a graph of the historical share price. There are challenges in measuring performance during peak COVID, as BikeExchange floated on the ASX on the 9th of February 2021. Regardless, we can see that peak performance of the company during the COVID recovery period, to which plummeted due to the shift in consumer preferences back to standard modes of transportation and the abolishment of the lockdown. Based on a weighted average cost of capital of 8.79% with a terminal growth rate of 2.22%, we derive a valuation of 61 cents with an upside to the market of 69.25% at 36 cents per share. We forecasted our growth rate using the average historical growth rate of 19.6% during years 2020 to 2023. We believe that considering the shock, revenue growth will increase to a peak of 34.6% in 2026, then eventually decrease to the terminal growth rate of 2.22% in 2033. The assumptions of our growth rate consider that public transportation will be rendered useless and private vehicle usage will decline as petrol stations and EVs rely on electricity, combined with the fact that traffic lights become unreliable, causing roads to be unsafe. The main area of concern within this firm is the absurd proportion of costs and expenses. The COGS on sales ratio of BikeExchange with an average of 124.6% during the years 2020 to 2023. Our rationale is that as the firm matures, coupled with the increased demand for bicycles driving a larger sales growth, it can invest more into R&D to innovate and provide lower cost solutions while maintaining its profits. We believe that from 2024, the firm will achieve cost efficiency, declining this ratio by 15% each year to a stable 50% by 2030. Our terminal growth rate assumption factors in the potential longer-term shift in consumer preferences towards a more reliable and low-tech solutions like bicycles. As we can see on the graph, net income and total free cash flow follow the same trend. There is an evident decreasing trend in D&A and change in working capital, contrasting the increasing trend of interest expense after tax and capital expenditure. I'll now hand you over to Khang, who will provide you insights into our justification behind the sell recommendation for Origin Energy.
My name is Khang, and I will talk about Origin Energy sell recommendation. For the first slide, we have Origin valuation and sensitivity when it comes to DCF, with the terminal FCF of 66 million. PV of Origin CF expected to be 9,673 million for the next 10 FY, with the price discounted price of 4.68, which is minus 47.85% deviate from the current values of 9.78 per share. About the multiple, our assumption based on the weighted average for 4 components compared with peers, we compute like a median comparable of like 6.32 per share. Next is WACC. Origin's share price discounted factor for long-term FCFs is 10.54%. WACC contribute by a 12.2% like RE and 5.98% RE. About the sensitivities, inversely from the share price of 4.68, WACC and terminal rates will deviate within 0.1% and 0.5 respectively range. Moving to the next slide, we have a growth rate FCF component. The EMP event could lead to the significant increase in CapEx, therefore driving Origin's FCF down. Initially, Origin growth rate are expected to be down like 83.97%, following is a minus 78.86% and slightly increase over the year to the terminal growth rate level of 1%. So finally, due to our forecast effect of the Carrington event on electrical company and bicycle demand, the recommendation here is to purchase like BikeExchange and sell Origin Energy based on their valuation. Thank you for listening.